I find it very odd to call him Hari. More on that later.
Let me explain you with a simple diagram of the four parties involved in a credit card transaction.
All of it happens in few seconds.
Few milliseconds. Starts off as a convenience product. It will become a payment product. Then it turns out to be a credit product. 400 million customers who would have a score generated. So it is widening the industry rather than being a competition to the existing. Income is growing, but their aspirations are also growing. The gap that is between the income and the aspirations is bridged by credit. Okay, I thought I would retire from ICICI Bank. Citrus Payment has been a journey that was most fulfilling. I'll take a quick example of something that we used technology to convert a customer insight to it. Founded this company called Pay Global. Pay Global is into cross-border merchant.
Welcome to the Life School Diaries podcast. I love listening to inspiring stories and exploring topics such as business, relationships, health, wealth, happiness, and much more. In each episode, we will listen to real stories and learn from them. I find these topics exciting because they are so critical to our well being. Hi, today we have Hari, co founder of OneCard. In this session, we will delve upon how the credit card industry works, from who are the key internal stakeholders and external stakeholders that are part of this industry. We will also get into the credit risk management part of the business, credit card frauds, impact of UPI and BNPL on credit cards, and how can customer protect their overall interests. We'll also look at EMI adoption in this industry and much more. Look forward for an insightful conversation promising maximum insights per minute. I find it very odd to call him Hari. More on that later. Now let's dive into the show. How does the credit card industry work? Who are all the key stakeholders and what is the interplay between them? Could you please explain in simple layman terms?
Sure. As we know, credit card is mostly a convenience product. For a basic transaction between a customer and a merchant, it helps in terms of convenience for payments. Let me explain you with a simple diagram of the four parties involved in a credit card transaction. It's primarily a four-party model. The customer, as a customer, I want to buy something. I want to buy it online or I want to buy it at a merchant at a shop.
Okay.
The merchant accepts a credit card, which means he needs to have a machine on which the card can get accepted.
Okay.
Merchant, you can say merchants like say Flipkart or Amazon is an online merchant, and say Shopper Stop or a Zudio is an offline merchant where physically you are present in providing a credit card for completing a transaction.
Okay.
The bank that issues the credit card to the customer is an issuing bank, like say HDFC Bank, ICICI Bank.
Okay.
Similarly, the bank that has provided the EDC machine or the payment gateway to the merchant is an acquiring bank. It is a merchant acquiring bank.
Machine is the electronic data capture machine.
Yes, it is a machine on which a credit card can get accepted to it.
Yeah.
It gets connected to the bank to which the merchant is connected.
Okay.
The primary transaction starts with the customer walking into a merchant or online logging into the merchant's website or an app through which the transaction needs to be completed. The customer needs to pay to the merchant for the services or the goods that they have taken. The transaction flow happens this way: when a customer walks into a merchant and then is initiating a transaction. Let's assume customer is buying something 1,000 rupees at Flipkart, right? And the merchant sends the transaction to their acquiring bank, provides the details of the card. The acquiring bank sends the details to the network. So networks are basically Visa, MasterCard, RuPay networks which connect issuing and acquiring banks. They provide the entire clearing services for these transactions.
Amex has its own network?
Yes, Amex has its own network.
Okay.
The network then identifies that the card provided by the customer belongs to which bank. They would identify that and then send it to the issuing bank. The issuing bank is now reviewing whether this customer's transaction can be approved, whether the customer has got sufficient limit, are the card available for doing transactions, is the card not hotlisted for any other activities. They would verify whether this transaction would get approved. Once they have done the verification, the activity of approval is sent back through the same network. The issuing bank confirms the transaction to the network. The network sends the confirmation back to the acquiring bank. The acquiring bank sends it back to the merchant, and the merchant now provides the goods and services to the customer. So in this case, the transaction gets approved and the merchant provides the services to the customer. Right? Now, this is a transaction flow. Now, the money has to move somewhere, right? The money movement happens the subsequent day, right? The money movement happens where the merchant says takes a claim for the 1,000
But
rupees.
one query before this is that even before the money movement, all this what you're talking about from customer using the credit card, checking at acquiring bank network, going to the issuing bank, all of it happens in few seconds,
Few milliseconds.
and
Yes.
you get a transaction slip saying that everything is verified, it's a
Yes.
valid transaction.
Yes.
Please go ahead.
It's a completely, in this entire network, the acquiring bank needs to receive the response from the issuing bank to the network in few milliseconds. Otherwise, they will have to drop the transaction and the merchant needs to reinitiate the transaction. This is the now having the transaction flow completed. Now the merchant needs to receive the money for the goods or services that they have given.
Right.
The merchant initiates that he needs to receive 1,000 rupees for the services that he has already given to the customer. Right. This is a promise that ensures the network is ensuring the promise that the merchant receives the funds for which the services have already been delivered basis the transaction.
Got it.
That's a primary promise, right? Now the merchant claims 1,000 rupees. The acquiring bank claims the 1,000 rupees from network. The network will ensure that there is a debit passed on to the issuing bank for 1,000 rupees.
Got it.
So the network will charge the customer for 1,000 rupees now,
Right.
and then provide the same to the network.
Mhm.
The network will then provide to the acquiring bank 1,000 rupees,
Mhm.
and the 1,000 rupees gets transferred to the merchant.
Mhm.
If there was no charges in this entire transaction, 1,000 rupees would be the money movement happening.
Right.
But however, for the services being provided and the network being maintained to it, there are certain charges being availed as part of this entire transaction. Plus, the issuing bank providing the credit facility to the customer is also the party taking the risk on the customer for the money that gets paid today but needs to be collected at a later date. Right? So, in this entire flow, the primary deduction, the charge that the merchant pays is a merchant discount rate.
MDR.
MDR. The merchant discount rate is a percentage predefined basis the merchant category. Like for example, groceries would have a lower MDR as compared to a shopping which has a high-end MDR. This depends in terms of the industry that is used for credit card purchases vis-a-vis industries that are new to credit card purchases.
Okay.
Right? So basis which the MDR, which is predefined by the network in consultation with the issuing and acquiring banks, is predetermined for the merchant category, and basis which that amount gets deducted from by the acquiring bank with the merchant,
Got it.
and the remaining money gets settled to the merchant.
So MDR is the commission that the acquiring bank makes from the merchant based on the predefined agreement that both of them have.
Yes,
So
right.
instead of 1,000 rupees, for example, based on that, they might get 950
They may
rupees.
get 980 rupees.
980
and
rupees. Got it.
acquiring bank would have received the 1,000 rupees.
Got it.
The acquiring bank also needs to pay some charges to the network for providing this entire facilitation. That is called the network charges. That is also predefined basis the value, basis the volume, basis some slab rates to it. That is pre-agreed between network and the acquiring bank. So the primary rate here is guided by the contract between the acquiring bank and the merchant. This is guided between the arrangement between the network and the acquiring bank. The payment between them is the one which is pre-listed, defined in terms of money that the issuing bank will receive from the network, while the issuing bank also pays some charges to the network for this facilitation.
Is that called the interchange?
The money that the issuing bank receives for this transaction is interchange.
Okay.
It is a larger share of the MDR that goes into interchange.
Okay.
Right? And the payments that both the issuing bank and the acquiring bank gives to the network are network charges.
So by Visa and Master providing this entire network, even if that percentage is 0.001, the volume of and the value of transactions
There are
that they are
billions of
dealing with
transactions happening.
per day, lakhs of crores of transactions, even if it's 0.01, it's significant money that they're playing.
Yes, absolutely.
Great.
So what started off as providing facilitation services onto it has become the entire network now.
Great. I think this is really useful. So, what are all the various revenue streams for any credit card company?
Sure. So in the transaction flow that we saw, in the money movement that we realized, one of the primary revenues is the interchange for the issuing bank, and for the acquiring bank, it is a merchant discount fee that is collected from the merchant. From a credit card issuing bank perspective, interest is the primary income stream. We'll actually look at it. Credit card, as I said, starts off as a convenience product. It will become a payment product, then it turns out to be a credit product. So when the customer chooses not to pay the full money that they have spent onto it, they choose to turn it into a credit product. That is when it starts earning interest revenue to the credit card issuing company. Typically, in the current setup, interest is a predominant revenue stream for a credit card issuing business. Subsequent to that is the fees that the issuing bank charges for the various services that they provide. This could be banks would choose to charge some joining fees or annual fees. They would also charge some foreign transaction fees if they would do. Sometimes when there are EMI conversions that happen, there are EMI charges that get levied to the customer.
Which are the top credit card companies in India?
Okay, the largest one is HDFC Bank, both on the credit card issuing side as well as on the credit card acquiring side. They're the largest issuance and acquiring bank in India. Of course, the top five banks in the issuing space, apart from HDFC Bank, is ICICI Bank, SBI Cards, Axis Bank, and Kotak. The top five banks constitute more than 80% of the total credit card issuance, while we have a longer list of banks that issue credit cards as well.
So, Hari, in terms of the global credit card network companies, which are the top companies and what is their market share?
Okay.
Globally.
Before I answer that question, let me tell you what has been the trend that has been happening for the last few years. Most of the local, meaning country level networks have started growing larger. For example, India Grown Network, which is RuPay, has been growing larger in terms of their domestic share as well as international share. Considering the same, a few years back, China got their own domestic network, which is the China Union Pay. About a decade back, Visa used to have a share of almost 50% of the total transaction volume to it, which is now gone down with the resurgence of China Union Pay. Visa would have close to around 40% of the global market share, while China Union Pay will have around 35% to it. MasterCard comes closer to that in early 30s to it. Then comes the other networks like Amex and Discover and the other networks of close to it. So yeah, RuPay still to find should inch closer to in terms of volumes. So
what is the state of RuPay within India? Is it gaining tremendous?
Yes, it has been growing heavily. RuPay on the debit card side has gained a lot of traction. More than some 50 million RuPay debit cards issued across most of the banks. The usage on debit cards have been not been growing as that of credit cards, and hence the volumes are not growing much. That has been the impact from UPI. But however, the credit cards usage and spends have been growing tremendously well. And there it is a share between Visa and MasterCard and RuPay. RuPay has been growing over the last 3 to 4 years. It has gained a lot of momentum.
Great. So, Hari, is new to card a large segment? What do credit card companies do to bring new to credit customers into the industry, into the fold?
Sure. The industry operates this way. It typically starts, if you look at the credit bureau, basis which the entire decision making is done. The credit bureau should say somebody who would have taken any loan, an asset product, right, would get a score generated from the bureaus, one of the 4 bureaus that operate in India at this point.
CIBIL kind of.
Yeah, TU CIBIL, Experian, CRIF. These bureaus provide a score basis an aggregation of all the information received from the asset issuing banks and NBFCs or financial institutions, right? And if you look at that, we would have more than 400 million customers who would have a score generated at this point in time in India. And out of that, if you actually see how many customers hold a credit card, it is 1/10 of that. So about 40 million customers hold a credit card.
Huge opportunity to penetrate and bring them into the fold.
Yeah. Good step towards a credit card for a new to credit segment is a secured card. A customer could create a FD with a bank and get a credit card linked to the FD so that there is a limit assigned basis the FD. And the customer starts using the credit card, understands the product well to it, over a period of time has generated a score as well. And basis this, then the customer can get upgraded themselves to a unsecured card, which is a regular credit card, and the FD gets delinked from the entire credit card product. So this helps in terms of both customers who are new to credit as well as customers who had a broken credit get back into the mainstream for credit products.
What are the ways in which credit card fraud happens so that we consumers can be aware about those things? And what are the ways in which one card has dealt with it?
Okay, so the first thing that has helped India per se has been the regulations around curbing credit card frauds. Way back in 2009 when RBI brought in the guidelines related to a second factor authentication for every credit card transaction. Yeah, it used to be a big, I would say, a milestone in terms of credit cards acceptance in the Indian market. It gave a lot of control to the customer in terms of providing a factor of authentication while doing the transaction. What started off as OTP was the primary method, and that way the customer is in control of the transactions being completed with the factor of authentication when the transaction is being done. Right, and
So, factor authentication, one is a CVV and the second one is the OTP.
yes, we beautifully blended a customer behavior with respect to authentication using an option called swipe to pay.
Okay.
What we've introduced is to understand the one card product is a mobile first product. All customers go through mobile first journey in terms of taking a bank's one card. And in the product, the customer has already authenticated themselves while downloading the app and maintaining the app on their mobile. We ensured that if the customer is logged in, there is an element of authentication already. So we kept the customer logged into the OneCard app as a layer of authentication and link that with the customer transaction journey. So when the customer completes a transaction, initiates a transaction, the authentication is done by getting access to the OneCard app and completing the transaction by swiping on the OneCard app. This is a journey that we've seen has picked up very well in terms of customers not needing to get OTPs and entering the OTPs to it. Few things that have evolved in the last 3 to 4 years has been mandating a mechanism to freeze the card when it is not in use. Right? Mechanisms like if I'm not using the card now, right, I can block the card and keep on my app or on my bank website. And whenever I need to do a transaction, I just unblock it and then do the transaction. So that the card is available for transaction only when I need to do it. Other levels of protection over there is created to say define a particular transaction limit for a credit card. To say that I typically don't do transactions above say 30,000. If I do, then it is a very intense thought process behind which the transaction would have done. Of course, there are multiple layers that have got built. I can just block domestic transactions, international transactions, tap and pay, contactless transactions, or domestic and international. All these are defined with limits. So these are controls given back to the customer so that the customers have more trust in terms of using it.
Got it. Other than having given controls, what are the ways in which frauds have happened that people can be aware of? Any one or two types of frauds?
So there are two types of frauds that happen. One is an identity fraud where the customer is impersonated and fraudster gains access to the customer's KYC credentials and is able to get a card on behalf of the customer, which is basically where the customer information is collected through means available in the market through which the fraudster impersonates the customer and gains access to a credit card. How can customers know about it? Of course, yes, customers can keep checking their credit report, the bureau report, to see if there are any unknown inquiries, unknown products that they have not availed is reflecting on their name. This is the first step to be aware about such products. The second is the frauds related to transactions, which typically happens either through an account takeover where somebody else has collected the OTP for the transaction and has gained access to the customer's card, or doing the transaction and collecting only the OTP for the transaction to complete the activities. So all the controls that I said in terms of card blocking, card freezing, defining limit are all addressed towards the entire transaction fraud.
Is BNPL, buy now pay later, a threat to the credit card companies?
Okay, so let me give you BNPL is probably new to the Western world, or Indians have been knowing EMI for years together. We've already understood EMI as a concept, and EMI standalone with respect to any loans or EMI within credit cards as well is not an innovation in India. So for Indians, of course, BNPL is not going to be a threat because that's already existing. Of course, what BNPL helps in the Indian context is to create avenues for credit at the point of sale. That is something that credit cards have done well over the last 15-20 years with acquiring aggregators, trying to tie up with merchants and provide that as a facilitation at the time of transaction. You would walk into a promo, you would walk into a Vijay sales onto it, right? The first thing that you do is to first choose what is the
Bajaj will be there to give you an option,
and then you do the transaction, right? So some form of at the point of sale, buy now pay later is already existing in credit cards. BNPL for small ticket transactions and not consumer goods or large ticket purchases is helping that industry completely. So it is widening the industry rather than being a competition to the existing segment.
Got it. EMI and BNPL. What is UPI's impact on the credit card industry?
Okay, so credit on UPI, which is the latest one that is trying to pull Rupee into limelight. You get a credit card on Rupee network, and you have the facility to use the UPI acquiring network for completing your transaction. Credit card over a period of time has already evolved in terms of certain purchases for which it is used. People have already created a mental model to say that, yeah, if I have to do a transaction above, say, 5,000 rupees, I use a card. Otherwise, I use a UPI. Each one will have defined threshold for their own practices. But UPI predominantly used for quick payments, convenience payments, and small ticket payments. So if you look at the average payment for UPI would be lower compared to a credit card. A credit card average transaction size would be anywhere closer to 2,000 rupees.
So you impacting more of debit card transactions than credit card?
Absolutely. To credit cards, it is only an addition. Somebody who would not been using a credit card for, let's assume, a 100 rupee payment for a saloon will now start saying that with the convenience of UPI, I'll be able to do the transaction. But the underlying account need not be a savings account. It could also be a credit card.
And especially, Hari, initially we were talking about people who are yet to adopt credit cards. I think this will be the first step, right? Getting used to someone who's never used a credit card, gets comfortable using digital transactions online, and then he gets comfortable using a credit card transaction also, I think.
Absolutely. So more than a credit card, it's going to be UPI, which will give the understanding of the digital payment for the customer. The underlying account could be a savings account or a credit card is then the customer's choice.
Okay. Moving from the credit card industry to one card, before that, if you could just walk us through your journey, corporate journey before joining one card. Where did you start?
Yeah, I started off with ICICI Bank when the bank was transforming itself from corporate finance into retail universal bank. Privileged to be part of the early team which set up the credit card and started growing the retail book at the bank. Yes, of course, joined my friend at Citrus Payments, which was into payment gateway services at that point in time, and also we launched the Citrus wallet as well. Citrus was bought over by PayU, and spent a couple of years at PhonePe setting up the entire merchant servicing and the operations function and the customer servicing functions. And that was a time when friends at ICICI, we were thinking about what is that we can do on the credit space. So when you look at consumption credit, meaning as the customer's income is growing, but their aspirations are also growing, the gap that is between the income and the aspirations is bridged by credit. And the credit that typically takes the first form for the customer is a consumption credit. So you want to consume something and you're taking it on credit, and the behavior is done. It being a mobile first product was a primary proposition to the customer. And how can we give a lot of control to the customer on the app was the thinking through which this entire app started. But however, for the customer to come and see the app is a long journey. To ensure that the customer gets inquisitive of what is the product to it, we then got in launching the metal card.
What are the motivational factors for you to move from being an employee to co-founding?
Okay, I thought I would retire from ICICI Bank when I was at the bank. Of course, the pull came in when I said we need to explore. And Citrus Payments has been a journey that was most fulfilling, where we did grow things from grounds up. There was absolutely nothing from there, building up products and then creating a difference in the industry for how a payment gateway is operated was a kind of thing that pulled me into this. And from there on, the journey started. And of course, when we are, the bank has given us a DNA to ensure that when we are doing something, we do it big, and that creates an impact. Consumption credit, we feel, creates an impact in the society. And with the knowledge and experience gained in the bank and in the industry, we thought that would be the right product to get into.
When was the company founded?
The company was formed in 2019.
And who are the co-founders?
Anurag Sinha is the CEO. Rupesh is the builder who builds tech and product. Vibhav Hathi is the chief business officer. Devang Shah is the chief risk officer, and I take care of all the processing functions.
Great. And what is the employee count like?
We're about now 1,100 people, predominantly based out of Pune.
Hari, how do you go about developing new products? How does one card come up with new products and features?
Yeah, of course, it starts with customer insights. What does the customer need? I'll take a quick example of something that we used technology to convert a customer insight to it. Customers, when they do a transaction on an international merchant, which has higher risk because there is no second factor mandate on an international transaction.
Yeah.
So the possibility of a risk is higher. So when we study the transaction, if the patterns are abnormal, then we tend to decline the transaction mostly, to ensure that there is protection to the customer.
Right.
But however, for a genuine customer, to ensure that this rate is much lower, we said that how is that the customer can give a pre-option to say that he's going to do this transaction and please don't decline this transaction.
Oh, wow. Okay.
So we came up with this product called Swipe to Auth. So if the customer does a transaction and we decline a transaction, let's assume a customer has done a transaction on an international merchant online and the transaction is declined for whatever reasons which are right from a decisioning point of view. There the customer gets an option to ensure that if the customer can authorize this transaction, in the next 15 minutes the customer can redo this transaction and the transaction will be approved. So there is a pre-authorization given by the customer to complete the transaction. This in the earlier days used to be a case where there used to be a call that is made to the customer and the customer needs to say yes to it and whether they have done the transaction or not, and then the transaction is approved. We said, why don't we give the control back to the customer?
So Hari, from here, let's move into the risk management part of the industry. Sure. How do credit card companies assess credit risk before issuing card to the customers?
Credit risk is manageable because it is at a portfolio. You choose the customer and there is a lot of play that happens at the time of choosing the customer, where there's a credit limit assigned to the customer. A credit limit is assigned basis income factors of the customer and the customer's behavior, and the limit can get managed over a period of time. The basis the customer's behavior, the limit can be done. So this is the time of initiating the product. Subsequently, the controls are also availed at the time of approving the transaction. I may have given you a 1 lakh credit limit, but however, when you're doing a transaction and your first transaction is for say 80,000 rupees at a merchant where we feel that this transaction could be suspect to it, we have an authorization decision making which sees that this transaction could be suspicious or could be not in your favor, and this transaction could get declined. The third one again is in terms of limit. So if I see a behavior of the customer and I see that this the credit limit is not the appropriate limit for the customer, we may be able to decide to say that we temporarily reduce the limit of the customer so that the behavior is to ensure that it is in customer's favor, and subsequently basis the customer's performance that the limit can be enhanced. These are two things. In credit risk, over a period of time the money can get collected, but in a fraud risk the entire principal gets wiped away. So hence for issuers, fraud risk is on top of the mind.
Much more significant than.
While a credit risk is managed through the entire process of credit management.
Got it. Hari, how do credit card companies manage and minimize defaults?
Okay, so there's a lot of science that goes behind it. Two parts to it. One, of course, there is a data element to it to understand behavior of the customer. And the second element is also a consumer behavior, right? Thanks to a lot of data science models that comes, the entire decision making happens right at the time the bill is generated. As in the bill is generated, they understand it to say what kind of services is needed for a customer. So the early stage, it's more in terms of service delinquencies where there could be a transaction where the customer is not done, or meaning the customer is disputing on the transaction and because of it tend not to pay, results into delinquency. We try and avoid and eliminate those kind of defaults from customers to ensure that there is no service deficiencies leading to delinquencies. And subsequent to that, it's more of information providing. The customer does not remember the due date, does not remember the MAD amount or the TAD amount. So helping the customer.
MAD is a minimum amount due.
MAD is a minimum amount due that the customer chooses to pay to ensure that the remaining amount is rewarded. Total amount due is what is fully billed to you that the customer can pay it in full. So when the customer gets information at the right time, they can pay up the outstanding and hence there is no default that can happen. And subsequent to that, the customer defaults, right? When the customer was provided the credit card facility, all assessment was done to ensure that this customer has never defaulted in the past.
Yeah.
So which means for the customer, this is the first time they are getting into a default scenario.
There is always a
We
first
need
time.
to
Yeah.
handhold them during that time.
Okay.
So the thinking over there is to ensure that typically we don't speak to others in terms of our personal finance. We don't tell that this is a problem or how do I come over this situation, right? So our entire journey has been built in a way where we help this customer with anonymity to ensure that they can go through this and how they would be able to overcome this.
Wow.
This has been the thinking towards creating a separate journey for customers who have defaulted. On the One Card app, the customer gets a bot. Instead of them speaking to somebody where they find it difficult to converse, they're more conversant with chatting in anonymity and ensuring that their problems are resolved. They also get propositions in terms of how they will be able to overcome the situation.
Wow.
So these are things that are helping us to ensure that we rethink the way the entire default is managed.
Very interesting, very different from the other ways of working wherein someone calls and tells you're due, pay up. And
so it is a journey, right? The way we would want to handle the journey is that we've tried to solve for this, and even after, let's assume, say we tried reaching out to the customer and the customer has not been favorable in doing the conversations, we gave some propositions on the app, but still there is no action onto it, then we may have to tell the customer at some point to say that, yeah, we tried to do all these things onto it. Now we may be forced to come and meet you in person to ensure that we are solving for your problem. So it's a journey.
Great. Hari, from here, let's segue into customer interest. So when is it advisable from the customer's point of view to take an EMI option? Are there hidden charges typically in this industry?
So yes, on EMI, and the interest rate is upfront said at the time of booking the EMI plan as well. With the EMI schedule, on One Card app, you'd be able to, before converting a transaction, be able to see what is the EMI schedule, then convert the transaction with the details of what is going to be the processing fee. Also understanding in terms of you're going to close the EMI much earlier, which is the foreclosure fee. Also understand about the foreclosure fees as well as part of the schedule to it.
And what are the risks associated with the contactless payment, the tap payment?
Yeah, so risk associated with it, of course, today I'd kept my NFC open on my app and on a merchant terminal. When I tap the app, then the transaction can get completed. Of course, customer needs to have a lot of control over using the feature. While it is a convenience, it also comes with caution that the customer needs to exercise to it. Of course, there's limits defined to ensure that there is no excessive misuse of that feature or excessive loss happening to the customer due to that. So most of the contactless transactions are limited with an upper cap value at a per transaction limit, and hence this ensures that the customer by mistake is not enabling it. But however, how do customers caution themselves or protect themselves from it? If your card is lost, and please ensure that you are blocking the card on the app, deactivate the thing, place a request for a replacement card, the card cannot get used anymore.
Got it. Hari, where do you see the credit card industry in 5 years from now?
Example at this point in time for comparison is what happened over the last decade with China. With respect to consumption credit growing, similarly the entire credit cards have also grown in terms of spends on credit cards has taken hockey stick growth. We see the same way happening with India as well. India is exactly at the point when the GDP per capita is going to grow threefold from now on in the next 1 decade. And this leads to consumption credit supported by credit line products like credit card. And hence we see this definitely growing from here on. With the right amount of customer protection measures and a lot of control back to the customer, we see this picking up from here on.
So moving into the personal space, you are a co-founder, so is your wife. A little bit about your wife who's co-founded a company. What does she do? And about your family.
Okay. My wife Prachi Dharani, she founded this company called Pay Global. Pay Global is into cross-border merchant space where they help Indian merchants for their international business, as well as also building in now convenience product for international merchants, how they would be able to enable Indian payment methods like UPI and others.
And you have 2 kids.
Yeah, I have the elder one who is in
Kavin.
The elder one is Kavin, the younger one is Kika. The elder one is 12 now, the younger one is 6.
Great. Hari, what are the great non-fiction books that you have read that you could recommend to anyone?
I'm not an avid reader. I've been picking up to reading now, created the reading corner now. I think that's a good start for me at this point in time. But I do hear a lot of your book snippets and the suggestions. Basis which I had picked up a few of the management books at this point in time. Yeah, not after that. And of course, the one that I'm reading now is about deep work, which is about thinking how do we operate in the chaos and disruption that is there around
Cal
us.
Newport, right?
How
Cal
do-
Newport's deep
Yes,
work,
absolutely.
Yeah.
That is
It's
the
part
latest
of my
one.
summary very soon. So I think you finish reading the book, I'll also summarize and share it.
Interesting. Yeah, that'll be great.
It's a great book. So just before I wrap up, I wanted to tell why I've been feeling very, very uncomfortable calling him Hari. There is a history to it. Way back from our college days, during our college days, I remember calling him and one other friend in college. All the three of us are batchmates, and I used to call him Chairman, and one other friend Pradeep. I named both were rechristened as Chairman, and from then on, for the last 15 plus years, I have always called them Chairman. Even my phone contacts says Hari Chairman and Pradeep Chairman. So it was quite odd for me to call him Hari during the entire conversation. Thank you so much, Chairman, for coming here. Thank you so much for watching the entire episode. Looking forward for your feedback. Please feel free to share the feedback in the comment section below and let us know what kind of topics you would want to see and which kind of guests you would want us to invite. Your suggestions will help us bring more valuable content to you. Thank you.